Today on the podcast, we have Chris Kwiatkowski. Chris is president of government guaranteed lending at Dogwood State Bank, and he's run multiple shops, and his roots trace back to CIT. And CIT was known for sales. So I wanted to know what it was about CIT and their sales mentality that created so much sales talent in the SBA industry. So stick around. You're president of Dogwood State Bank's GGL division. That's been your thing. You've been leading divisions in the SBA world, but your roots trace back to CIT.
Yeah.
Did you start in sales?
I did. If you want to go back even further, I've been involved with SBA lending since 1993. Actually started my career with the SBA in Washington, D.C., and then moved down here to North Carolina as an underwriter, a loan officer with the SBA. So they formally trained me how to underwrite SBA loans, and that's where I got my credit chops. And from there, I went to what was then Nations Bank, which is now Bank of America, because I'm dating myself there, I realized that. And then I was hired by AT&T Capital. And I didn't realize AT&T had a lending arm. I thought it was the phone company, and I got phone calls that thought I was the phone company. And AT&T Capital became Newcourt Financial, which eventually became CIT. So long road to answer your question. But yeah, I was hired at CIT as a RAM, a regional account manager.
And how long were you doing that at CIT before you got into management over there?
I did 2 years as the regional account manager. And then for some unknown reason, I chose to go into sales management. I still have to check for the lobotomy scars because people give me a hard time about that. But I was young and impressionable, and I thought, hey man, this is what you do. This is how you move up. And so yeah, I jumped into sales management.
Well, hold on. Then do you regret it then? Because you ended up sticking with management and gone on to lead like a bunch of different divisions. I mean, do you wish you just stayed in sales?
There are days I tell people when I am done with this leadership role, I'm going back to being a BDO because it is a fantastic opportunity. And I don't, listen, I did what I did and I think I've done well with it. And I enjoyed putting a team together. I've learned that I have a strength in being able to get a team to work together and build a culture and everything else. But there are days I wish I just had to worry about myself, that's for sure.
Yeah, well, I was watching SBA Roadshow here, Sticker, and he just interviewed, I forget his name.
Brian Carlson.
He was, he led like, it was like Byline or Ridgestone or something. And then he's in like I don't want to say the final leg of his career, but like he's like, I feel like he's gone full circle now. It's ending as a BDO and he's like run large divisions, and I love to see that going full circle thing. That would be cool because it really is a good job, the BDO job. And you talk about moving up, and it's like, okay, well, sales is not a high up position in the org chart, but it's still, I think, the best position in the org chart to be in. And people can grow their own production. That's how you kind of get ahead. You can become just a top producer and keep going at it, or you can go into management. Either way, you've got to answer to someone. So like the downside of sales is like, we're in a rat race. Like, I feel like every day you're having to move the ball forward on every single transaction, and you're answering to referral sources and borrowers. And you don't take vacations, or if you do, you're on your phone the whole time, which may be the same for you, but that's the part you're at least not having to deal with. So I'll just make you feel a little bit better with that.
Well, I appreciate that. Sales is probably an underappreciated aspect of the job. Obviously, I appreciate it. And that's, probably one of the things we're going to talk about is, there's no production without the sales. There's no profitability without the sales. We can't forget that, and sales is an art. And I think that's what a lot of people don't realize. And that's, what with the foundational principles at CIT, it was a professional sales organization. You learned how to sell. You had pride in that sales ability. There was no doubt about what you were there to do. And again, it was professional. You felt like you were learning, like you were gaining knowledge in sales, which I probably hadn't felt up to that point. So I thought that was incredibly important about CIT.
A lot of the folks in the SBA space come up from banking and work at banks. And so first of all, at that time I guess there wasn't really a bunch of players like there are now, but they put emphasis at least on sales. So like, what were some of those foundational principles that they would kind of preach to make the BDOs better salespeople?
Well, I'm not sure there were foundational principles, if you will, if you look at it that way, other than we knew what we were there to do. And, sales was looked upon as a skill set. There was value in sales. And if you weren't getting, the good rates that you could be getting on deals, you were selling yourself, your value at a discount. Are you willing to discount your value, the time that you spend on a deal, the time that you spend cultivating referral sources and working with borrowers? Are you going to sell your services at a discount? And I think that's truly what it was. I got that mindset of, well, wait a minute, why am I spending my time with this individual if they're not valuing what I do? If they think I'm a commodity, then they're just going to go to the next lowest rate or the next highest fee somebody is going to pay them. So that's something that people need to realize is have value in yourself. Have pride and value in what you're doing. What you do does have value. Don't just take what they want at face value and say, okay, I'll do that because you want it. Don't be an order taker.
I did work at ReadyCap, which had CIT roots as well. So a lot of this is something that I grew up with as I came up in my career because of some of my leaders and managers were ex-CIT people. And so a lot of this resonates with me. And I think it sounds like there are some foundational principles there, because selling value is one of them. And it's different approach to the banker who's going to say, all right, yeah, okay, so you want a lower rate. Let me see what I can do. Let me go see what I can do. So that's one. And I'm sure there's probably some other ones if we started thinking about it, but essentially just placing the emphasis on sales. Now, like from the standpoint of like the credit closing management team, was sales viewed differently then than they are today?
No, I don't know if it was viewed differently within an organization, perhaps. So at CIT, we were viewed as a professional sales team. When you go to banks, and I can't say it's at this bank, but you pointed out a non-bank lender versus a bank has a different look on things. I didn't hire bankers to be my BDOs. That was not the right fit for them. So I think the sale in my organization, everybody is valued equally. And sales, underwriting, or credit processing or closing, portfolio management. We're a team, and we're all moving towards the same goal, and that's how I built my culture and my strategy here. But I think SBA lending at different institutions is looked at totally differently. At some places it's really looked down upon. Oh, you do SBA lending, so you take the garbage, you take the bad credits, you take the people who are bankrupt and so forth. So I really think it's a view on how an institution looks at SBA lending, because that's a whole different ball of wax there.
Yeah, and that kind of era, CIT, money store, maybe, I don't know. I wasn't around, but I hear on my podcast from guests, and it seemed like that was kind of the era where folks were starting to one by one, deal by deal, change the perception of SBA and bring it to the forefront and add that professional sales skill to it. And so CIT did it really well, I guess. Now, did they have any sort of different approach with the underwriters and closing folks that they hired in terms of, were they hiring bankers for those positions? Or were they training like new people with different types of mentalities?
No, I think, credit's a different ballgame. You have to have formal credit training, and, normally you were getting it from banks. You could have come from a non-bank lender that had credit training. I got my credit training at the SBA. So it just depends on where you have to be formally credit trained if you're coming in as an underwriter, or you come in a position that has some aspect of underwriting or analysis. Like I've taken people before and made them their portfolio managers, and they learn how to do annual reviews and learn how to do cash flows and things like that, and do financial statement analysis. And then from there, we've had good opportunity to bring them into the underwriting role. So it's not the only way to get people, but finding that formal credit training is not easy, and it's even harder today because even banks don't have formal credit training programs anymore because they would train people and they get poached right away. So it's difficult to find those people.
Well, we're at kind of the worst possible place we've ever been in terms of talent in the industry for underwriters and closers. I mean, there's such a shortage. SBA lending's up huge. No one's training. No one's been training. We're all just hiring each other's people and everyone's moving around, but there's never, the shortage isn't being met.
Right. And you're right there. I mean, I've always heard, hey, if somebody can put together a training program, because we as an industry are graying, not you so much, we are graying out, and we need to bring up some new talent. And there are not these training programs to speak of because the companies don't have money to invest in the training and the time. We need people to hit the ground running. So it is difficult to find people. And then on the other hand, what you have is anybody with SBA on their resume says they do SBA lending, and it's just not true. Just because you've touched an SBA loan, first of all, doesn't mean you've done it the right way or done it very well, because I get a lot of retreads out there. I've been in this industry long enough. I call it retreads. I've seen this resume over and over and over again, and they just keep hopping from place to place to place and never do any major production. And so that's a worrisome thing. And other times they're just barely touching SBA and they're not focused on SBA. So it's very difficult to bring them up to speed at the pace that we run.
Yeah, no, that's right. And it's harder now too, with especially with the underwriters and closers, being everyone's working remotely, working from home, because now no one's really figured out how to train new talent, but really no one's tried to or been able to figure out how to do it remotely. That's a whole nother thing. Are you guys remote, by the way, or do you have?
Well, we have our cores here in Charlotte, but we are hiring remote people. And to your point, the only remote people that we can hire are people that already have the experience and the talent, and I can get referrals for if I don't know them already. I can't hire somebody remotely that doesn't have the talent set already. It's just I can't ingrain the skills into them. And even maybe what may be more important and something that I still have to work on is ingraining our culture in them. Because when you're working remote, you're not here every day. You're not seeing how we interact together all the time. Yes, we can do these Zoom calls, et cetera, but it's just different because we have a camaraderie here. Majority of my team, we've worked together before and we understand how each other works. So when we have people remote, we have to work extra hard to bring those people into our culture.
Okay, well, let me get into that with you, because your resume essentially is leading shop after shop after shop. We don't have enough time to name them all, but Yadkin was a highlight. Mm-hmm. What was it? Banco Popular in there?
Yeah. Banco Popular North America. We were Popular Small Business Capital.
Yeah. So you've been at ground zero, all this stuff for many years. And so let me fast forward to your current venture, which is Dogwood State Bank. Solid organization, doing lots of production. You started this from scratch?
Yeah, we started from scratch. What we did is we raised $100 million to capitalize a small bank on the coast of North Carolina called Sound Bank. And they had about 3 or 4 SBA loans in their portfolio. These were just little community bank loans. So they didn't have a focus on SBA lending there. So when I came aboard, it was build a team, build a machine that can produce.
You were also involved in the actual raising of capital for this venture?
Well, I was involved with the leadership team that raised the capital for this venture. Yes,
So you're in on a very early stage. They're not just saying, "All right, we've done this. We're ready now. Let's go hire a guy to go do it." Like, you were in there from the very beginning, and so you were part of that plan. And shortly after raising that capital, you rebranded the bank, right?
Correct. Correct.
Why'd you do that?
We call ourselves a bank of Re's. We renamed the bank, recapitalized the bank, relocated the bank headquarters to Raleigh, repopulated the board of directors, and repopulated the management team. So we're a bank of Re's.
So, okay. So you come in, and obviously the first thing you need to do is hire some key positions, right? So you said these are people that have followed you around.
Yeah, I've been blessed. I've worked with a lot of wonderful people throughout my career, and we've formed a good bond. So when I went to talk to them, and don't get me wrong, a lot of it is timing as well, because where we were previously, so we were Vantage South Bank in 2011. We merged with Yadkin Bank, and then we were ultimately bought by FNB, and FNB came in and just wanted to do things differently. So a number of us made the decision that we didn't want to do it that way. So we moved on. So a lot of my team had gone to other places already. And I had a non-compete, so I couldn't hire them from FNB anyway. So a number of these people I had called up and said, hey, I'm essentially getting the band back together. Are you interested? And I was lucky enough that many of them said, hey, I'm glad you called. It's great timing. Things aren't going great here, or whatever it is. Some weren't so easy. Obviously, I don't know, Chris, things are going pretty good over here. Let me think about it. And I was pretty relentless in pursuit. And, they saw the error of their ways, as I like to say, and they came back here. And, I think they like the way that we operate as a family here.
I mean, because some of the key positions, would you have like a chief credit officer or a closing manager? Those are two of the important ones, right?
Yeah, our credit manager was key to us. And so our credit manager had worked with us previously at Yadkin and FNB, and had gone to another place in between, but wanted to come back to our team. So we were lucky to get him back. We have senior closers that joined us, that came back to the team, portfolio people and so forth. So yeah, people in each area, and obviously in the sales area as well, came along.
Roughly what percentage of your team right now has been with you at a previous shop?
75%.
That's a lot.
Yeah.
And you reference, a certain type of culture. How would you define that culture that you're trying to build within the organization?
Well, and it goes back, I think, to CIT. I'll first say this: we call ourselves the island of misfit toys.
It always does. It always goes back to CIT, right?
It goes back to CIT because that's where I learned how to really scale this type of business. But like I said, we call ourselves the island of misfit toys because honestly, in most banks, people don't understand what we do. They don't know how we do it. They don't know, why we do it a lot of times. But, once it gets in your blood, as you know, SBA lending gets in your blood and it's tough to get out. So, we have a island of misfit toys mentality. We have a work hard, play hard mentality. We run hard. Everybody here knows how their position affects the overall business unit. I make sure everybody recognizes how they fit in, what they do, how it contributes to our bottom line. And I think a lot of organizations don't do that because people just feel like they're a widget in this huge machine, the cog in the machine. And here I need to let them know exactly how they affect our production, how they affect our profitability. And that's something I take pride in, that we can show them financials month in, month out. Guys, look what we accomplished. Look what this team of 20 odd people accomplished this year. We made it to the top 30 in the nation with 21 people in our organization, which is just amazing to me, to be honest with you.
That's a mind-blowing figure.
We punched way above our weight, I like to say.
That is crazy. And that's about an average loan of what, like 1.1?
Yeah, about 1.1 million at the time.
Yeah. Well, that's incredible. I don't know how you're going to do that. We're going to have to do another episode for that. I feel like the tides are kind of changing with this whole SBA being the nerds now. We're like kind of cool because of PPP, and we have the spotlight on us, and it's becoming very much a household name, and we've come a long way, I'll say. So now everyone wants SBA, or at least it's trending in that. Would you agree?
I do agree wholeheartedly. PPP has really put the spotlight on SBA, but as those of us who have been in the industry for a long time, we recognize PPP lending is not nuts and bolts SBA lending. It was a totally different program. However, it did open up a lot of institutions' eyes to SBA and what goes on there. Now, I'll say this, I've been in this industry long enough to see this cycle repeat itself. This is not unusual. Banks, they will get their guarantees denied or repaired because they didn't do it right. They didn't take the time to document it properly. They didn't take the time to understand the SOP and what's eligible and so forth. And so they get a bad taste in their mouth and they jump out of it. Conversely, the SBA starts to crack down because a number of lenders didn't take the time to learn how to do SBA lending. And all these things are popping up that they have to punish the entire industry for because little Johnny kept screwing up. So it's a cycle that I've seen a couple times before. Right now, SBA is pretty again. It's attractive and people want to get into it. I kind of know what's going to happen in a couple of years when, if the economy starts to get shaky and things start to get a little rough and a bunch of guarantees go into, for repurchase, we'll see what happens at that point.
But you're right. It's a very unique industry. And so when you're hiring a new employee and you've worked so hard over the course of many shops to build a certain culture of, work hard, play hard, whatever you want to call it. How do you get them to buy into the culture and to kind of be a part of that team mentality?
Yeah, that's a fair question. On the sales side, I think it's very much building the right expectations with my sales team. I want to sit down, and it's really with any employee, but with sales team guys, when I sit down with somebody and we talk about coming on board, I go out of my way to make sure I'm outlining the expectations. They need to know exactly what is expected of them, because what I tell them is I don't want to sit down 6 months from now and say, okay, where did we miss? Did I not explain this? Did I not tell you we don't do this? Or, this isn't going to be something we do, or you're responsible for this. If we're having that conversation at that time, I know that I laid out those expectations. If I didn't, it's shame on me. I shouldn't, I can't afford to have misfires. If I have a misfire, that position doesn't produce for a year. Because find out 6 months they're not producing. You have to, get rid of that person. Then it takes you another 3 to 4 months to find somebody, and then to wrap up. It may be more than 12 months to really fill that position. So I really try to get ahead of it and say, please, 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 let's have these difficult conversations up front. Let's make sure we understand where each other stands. And, if we're good, let's walk down the road together, and it's going to be a wonderful, wonderful relationship, because as you found out, the BDO role is an incredible role because it's like owning your own small business. You are building your territory, your business, your reputation is yours to build. You spend your time the way you need to spend time. It's unlimited income. Time is your only enemy. You do all this with the corporate support that we give you. And so it is a wonderful, wonderful job. Tell me why I should be giving it to you.
Well, first of all, that sounds so familiar, and it all goes back to CIT, as we've said multiple times throughout this conversation, because I've only talked to you once before. And a lot of what you're saying is stuff that is so commonplace for me because I've heard it through multiple managers who all go back to CIT roots. Now, the flip side is the job market is so tight. Anyone could get a job anywhere, and everyone's competing for talent. And it's hard to do what you're doing and stay really disciplined in your hires. It's important to have that conversation up front. What are the expectations that you have, like the top kind of couple expectations that you're looking for in a BDO that maybe they're harder to find or not everyone has them?
I used to have core competencies going back to my CIT days again. Myself and Matt Putnam, I know yep. Matt's on our team now. We still, like working together. At least I still hope he likes working together. But he and I at CIT, we really took that sales culture to the next level and decided we need to kick up. We got challenged by our boss, Dick Langworthy. A lot of people may know that name. God rest his soul. He really challenged us to double application volume. And Matt and I put together a sales cycle, which is not a new concept, but just within the SBA lending realm at CIT at the time. What did the sales cycle mean? And we developed core competencies around what a BDO or a regional account manager at that place should be. And if I remember correctly, You've got to have good marketing skills, visibility skills, sales skills. Visibility is key. You've got to have good organizational skills, time management skills. You've got to know enough credit to be dangerous. You have to understand cash flow. SBA lending is cash flow lending. If you don't understand enough to be dangerous, you're really going to have a rough time. You're going to throw so much stuff up against the wall, and you're going to sully your reputation internally. Because as a salesperson, that's all you have is your reputation that you're selling out in the marketplace. They want to work with Ray Drew, and internally, if your underwriters get a deal from Ray and go, oh, here's another deal from Ray, and they roll their eyes, we got problems. We can't afford to let that happen. So, those are the core competencies that I talk about. Now, visibility, I tell everybody, I work with a great marketing company. I can get anybody visible. Give me the contact list, I will get you visible. What you do with it after that is up to you. How you manage those relationships, how you manage the deal flow that comes in, how quickly do you move deals? What does your manufacturing process look like? And what do I mean by that? Okay, when you get your lead in, what do you do with it? How do you handle it? And once you've talked to that individual, where does it go? How do you manage your time to touch base with them again? How do you collect the documentation? How do you know you should be working many deals at one time? How do you know where any one deal stands at one time? Now, I'm going back before there was Salesforce and Encino and all that happy stuff. So how did you keep yourself organized? These are crucial things to being a successful BDO, because what I and Matt wanted to do at the time was take somebody who was producing $12 million a year. We wanted to get them to 15. We wanted to get 15 to 20 and 20 to 25 and so forth. How do we take them to that next level? And that a lot of times was time management and getting them more visible out there and helping them move their deals faster through their process and their machine.
I love hearing all of that. Like you said, sales is an art, and this is something I enjoy very much, getting down into the granular aspects of.
Well, you can tell I get excited about it too when I'm interviewing people and so forth. I get very animated because I'm like, as we said before, damn, this is a great job. Why am I not doing this again? Because it's awesome,
I saw you. I noticed you light up in particular on this topic, which is really cool. The only thing is that, you mentioned the reputation, and you can nurture your leads and collect the packages, keep track of everything, structure it, ask the right questions, do like some high level cash flow analysis, and then submit the loan into underwriting. This is where it starts getting a little bit more tricky for the salespeople. Something I've been trying to work on myself is you don't have full control at this point. Hopefully you've set the right expectations, but you're really relying on your teammates to help get it to the finish line now in terms of underwriters, closers, et cetera. How do you like your BDOs to manage that part of the process where they don't have full control, but their reputation is on the line in terms of we need to execute by a certain date or this or that? And it's a tough balance.
It is a tough balance. And there is always that healthy friction between sales and credit. Sales is pushing, and they're going to push. And credit has to watch out what we're approving and what goes into the portfolio. Because at the end of the day, a good salesperson realizes what they put in the portfolio is going to affect them and everybody else at some point. Because if you've been around long enough, you've been at a place where problems start to pop up in a portfolio, and that will change your lending appetite. So two things there. One is the structure of your organization. Going back to when I was at Popular Small Business Capital, I went in there to be kind of a national sales manager. And within 2 weeks, they said, we need somebody to run this entire organization, and you're that guy. And I was like, whoa, wait a minute. I'm not moving to Chicago. I live in North Carolina. I love North Carolina. I'm from Chicago. It's a great place to be from, but I don't want to live there again. We worked that part out. But the key was I drew up a structure. And everything rolls up to one person. Sales, credit, processing, closing, portfolio, all rolls up to one person. Now, because they all need to march in the same direction, or they all need to row in the same direction. If credit is answering to somebody else, or closing is answering to somebody else, and I'll get to the separation of church and state with credit and sales, but if they are answering to somebody else, they've got a different agenda. I don't have the same agenda they do. And they can cross their arms and sit back and say, well, that's not what my leader says. So I wanted to make sure that they all answered up to the same person, which happened to be me at that time, Now, credit would have a direct line to risk management. Have to have that separation of church and state. I never, even though I was an underwriter formally trained, when I'm a leader of an organization or on the sales side of it, I never had any credit authority. I never wanted it. People have offered me a pen before, and I'm like, no, I don't want that. So credit needs to answer up to risk administration. They have a dotted line to me for service level agreements and day-to-day duties. Turn times, getting to deals, talking to people, and so forth and so on. But because they sit with me, because they answered up to me, I was able to ingrain them into my culture. We together worked on our credit guidelines. We agreed on our credit guidelines and how we were going to look at deals. We agreed on our service level agreements and how our BDOs and our credit team was going to be paired together, that they were talking together all the time, that they had strong relationships. That is so key to me. And anywhere I've gone or anywhere anybody's interviewed me for, I've always said that if we're not going to do this, guys, I don't want to be involved, because I'm not going to bang my head up against the wall because somebody else has a different agenda. Here, we all have the same agenda. We all live together and die together, successful together, or we fail together. And that's really ingrained in this team. And so that's something that's so important to me, that I need to know everybody has the same goal in mind.
Right. That makes sense.
And so that, that is the key when I hire. So we hire the salespeople, the expectations, hire the internal people with the same expectations that we're going to work together, and, ingrain that culture in them. And I treat all my team with respect. I don't make them clock in and clock out if they need a doctor's appointment or something. We treat them like adults until there's reasons to treat them otherwise. And they appreciate that. They don't feel like they have to come here and ask Mother May I if they need to go to their kids' school performance. I want them to go. We work long hours here. We work long and hard, and they need to understand that we probably spend more time together as our work family than they do with their regular family. So they need to take advantage of those opportunities. I know they're good for it. I know they're putting in hours later on to cover those bases.
Well, I have a random question I want to ask you just for fun, and then we'll wrap this up. But what's your biggest pet peeve, something that BDOs do?
Biggest pet peeve that BDOs do?
Not your BDOs, because you wouldn't have hired them.
Yeah, because they're perfect.
Out in the world.
Biggest pet peeve with a BDO is when you're bringing a deal to your credit team, to your credit partner, to your teammate, and there is a deficiency in that deal, and you don't highlight that first thing right out of the box. Guys, here's a deal. Here's what we're missing for this deal, but here's why I still think it's a good deal. Get that out front right away, because if the credit person has to dig for that and you didn't tell them about it and they find it, your credibility just took a big, big hit. So that's my pet peeve. Be upfront. Hey, show them where the hair is right away, and tell them why you still think you should do it. You're going to gain all kinds of credibility. Your
pet peeve that you just came up with is also the number one reason some BDOs consider themselves successful. Our last guest was a BDO, and I asked him basically like, why are you successful? And he said, because of that. He has credibility with his internal team, and he always says, here's the weaknesses of the deal. Here are the possible reasons, that's mitigated. And he's closed 83 million in 7A loans so far this year.
Phenomenal. Just phenomenal.
Yeah. All right. Thanks for coming on, Chris. I'll talk to you later.
All right. Take care, Rick.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.